Hello everyone. Today we are going to present the financial statement analysis of FKP Corporation. Firstly, I would like to give you a brief introduction. FKP is a leading Australian property and investment group with more than 30-year experience in property industry. This company specializes in construction, design, property investment, and project management. FKP was first established in Queensland and is now operating in Brisbane, Sydney, and Melbourne. Over the past few years, FKP has completed lots of projects including construction, residential communities, retirement villages, and commercial industrial areas. In addition, FKP has provided high-quality living spaces and apartments including resorts, towers, and contemporary complexes, as well as real estate for lease and sale. Overall, FKP is a rather mature company in this industry. Going through to the question 1, Entities Principal Activities. According to the 2010 annual report, the principal activities of the combined group during the course of the financial year were: first, development, management, and ownership of retirement villages; second, investment in and management of retail, commercial, and industry property and retirement villages; third, development for resale of land, residential, retail, commercial, and industrial property; fourth, commercial, industrial, and residential building and construction for the combined group and external parties; fifth, funds and asset management; and finally, property and project marketing. According to question 2, consolidated profit. As shown from the 2010 annual report, the consolidated profit after tax attributable to the shareholder of the parent entity for the 2010 financial year is $53.5 million. Question 3. Peter Brown is the CEO of FKP. He got $1,566,350 as salary, $750,000 as bonus, $14,954 as defined benefit obligation, $25,000 as superannuation, and $2,356,304 equity compensation annually. At last, the total remuneration of CEO is $4,712,608 in the 2010 financial year. Question 4. Auditors. The members of Audit Committee include 3 auditors. They are D.C. Crombie, L.R. McKinnon, as well as S.G. Lee. The total audit fees of FKP for the 2010 financial year will be $516,000. The chairman of the audit committee receives $2,500 per annum, and the other members of the audit committee receive $500 annually.
Question 5 is about the subsidiaries information. According to the Note 34, there were 67 controlled entities. There are no entities that are less than 55% owned, and no foreign subsidiaries, according to the annual report. 6 is about the associates of all investment in jointly controlled entities. There are 8 associates in jointly controlled entities: Forest Palace, Cleveland Syndicate, Forest Palace, Cliffview Syndicate, Retirement Villages Group, FKP Core Plus Fund, Master FKP Property Limitation, FKP Core Plus Fund 2, Horsepower Limited, Retirement Villages Group RE Limited. Question 7 is about the interest in jointly controlled operations. Brookville Strata has an 81% participating interest in the joint venture profits, and Market Turf Farm has a 50% participating interest in the joint venture profits. Question 8 It's about the goodwill and CGUS. The value of consolidated goodwill of FKP in the financial year 2010 is $0.6 million. For the purpose of impairment testing, the financial report does not disclose specifically, but generally, the entity defines cash-generating units as the smallest identifiable group of assets held with the primary objective of generating a commercial return that generates cash inflows from continuing use that are largely independent of the cash inflows from other assets or groups of assets. There has been no any impairment of goodwill in the 2010 financial year because in financial year 2009, the goodwill at carrying value is $0.6 million. There is no change for the year 2010. As a result, the impairment of goodwill in financial year 2010 is zero.
According to the tax consolidation legislation, the entity has formed a tax consolidation group. Question 10. Segment disclosure. According to the Note 26 segment information, the entity has made the segments disclosure in many aspects such as reportable segments, changes to reportable segments, and segments, revenues and results, and so on. Operating segments are identified on the basis of internal reports that are regularly reviewed by the main decision maker. Question 11. Accounting for extended economic entities. For subsidiary entities, the full consolidation accounting method should be applied. The rest extended entities should use the entity accounting method for consolidated accounts, and by the same token, subsidiary consolidated accounts should choose the consolidation method, and for the parent accounts of it should apply the purchase method. Investment in associate under AASB 128.1 and investment in joint control entities under AASB 131.1 should use entity equity method. And an equity method is a method of accounting whereby the investment is initially recognized at a cost and adjusted thereafter for the post-acquisition change in the investor's share of net assets of the investee. The profit and the loss of the investors include the investor's share of the profit and loss of the investees. If the investors is not a parent entity, the entity method, the equity method is applied in separate financial statement of investor. In the case of FKP, the associates and the GCE consolidated accounts should apply by the equity method. The cost method is used for the account of investment in separate financial statement of the parent entity. Therefore, for FKP, the associates and the GCEs and the GCOs and assets parent entity accounts should apply by the cost method. For the GCO and assets consolidation accounts should use the line-by-line method. FKP Property Group as a parent entity, and it has three investees. The first one is FKP Limited. It has 67 entities and joint control entities, and 8 associates. And the second investees is the FKP Property Trust, and it has 100% owned 11 entities and 97.9% owned of CPTA Trust, and the third investee is the GCE, owned 3 entities. This is the reference. Thank you very much.